Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get to the headlines. Sensex surges over 1,300 points and Nifty gains more than 400 as investors continue to cheer the government's tax moves.
Finance Minister Nirmala Sitharaman says the government will evaluate the fiscal position closer to next budget, even as Moody's warns of fiscal slippage post the corporate tax cuts.
Petronet signs a $7.5 billion pact to buy 18% in Petrolet's Driftwood LNG Terminal in Louisiana and negotiate the purchase of 5 million tons of gas per annum.
Prime Minister Modi endorses Donald Trump for a second term as the US President at a gala event held in Houston last night.
All right, let's first take a look at markets. Yatin's here with us. Afternoon, Yatin.
Afternoon, Ira, and clearly it has been a very strong session for the markets. Of course, largely driven by short covering as well as fresh buying in selective counters. Of course, if you look at the key indices, 3.5% odd up on the key benchmark indices, the Nifty and the Sensex, and it's day of the private sector banks. In fact, if you look at the Nifty bank, that is up 5.5%. So clearly, almost again trading session in a low. We are looking at a huge outperformance coming in for the banking stocks. Talking about the gainers, L&T continues to rise, another 10% up on that stock. It's the top Nifty gainer. Of course, the tax incentives relating to the capital expenditure, is probably aiding the overall, capital good companies as well as these infra names. So L&T is in focus and will remain in focus. We also have IndusInd Bank, which is doing well, 8% up for that one. Bajaj Twins as well as HDFC Twins. So we have Bajaj Finance, Bajaj Finserv up 7.5% each. HDFC Bank as well as HDFC. These are the two stocks which are clearly aiding the overall rally at this point in time, being the heavyweights. Adani Ports also is one of the top gainer as far as Nifty 50 stocks are concerned. Clearly, like Friday's trading session, today also there is imminent pressure on the IT stocks as well as pharma stocks. So all of these companies continue to trade lower. We have Infosys, Dr. Reddy's as well as Wipro being the top losers on the Nifty at this point in time, along with Z Limited, which is now trading at the lowest point in the day, 7% down for that one. So clearly Z, that is one stock which is under pressure. On Friday's trading session also, the stock shut the shop in the red, and today also some pressure building up. In terms of active securities, watch out for Maruti Suzuki. That stock is up 6%. Tata Motors is down 3% on the contrary side, and SBI, ICICI Bank and ITC are the other heavyweights which are doing well in trade.
Nathan, thanks for that. Analysts, meanwhile, have hiked earnings estimates for the Sensex after the government announced cuts in corporate taxation rates on Friday. Take a look at this chart. Forecasts for the Sensex 12-month forward PE have jumped nearly 10% after that announcement. That's according to data compiled by Bloomberg. The cut in tax rates is expected to improve profits, enhance investments, and lead to economic growth. Analysts have also now raised Sensex target back to 45,000 and also have raised revised earnings growth estimates to 25% from 13 for fiscal 20. That chart sort of gives you the spike in the 12-month forward PE for the Sensex. But Darshan is standing by to take us through some of the individual brokerage targets and how they've been revised upwards. Darshan.
Yeah, so Harsha, first of all, Goldman Sachs, which has raised the Nifty target to 13,200 from the earlier 12,500. What they say is that the corporate tax cuts that have come in will revive growth significantly. There will be a revival in investor sentiment, and they prefer domestic cyclicals over exporters. So because if you see it in today's market, pharma, IT, some of the exporting company stocks are down in trade, while the domestic consumption play is up in today's trade. Morgan Stanley is also hiked the target price for Sensex to 45,000 from 40,000, and they're saying this move now creates room for earnings growth that will be improved. The EPS increase is 25% for this year and 23% for the next year. And the triggers that they say is rate cut, privatization, FPI limit increase, and sovereign bond issue. So if this happens, the Nifty and the Sensex can propel even higher. Among the stocks, they like mid caps over large caps and value over quality and momentum. As far as earnings potential is concerned, UBS has upgraded the earnings by close to 8 to 10% and revised the base case to 12,300. The bull case is 13,300, while the bear case is 10,300. The only issue is they believe that there could be some bit of concern over the fiscal deficit, but that needs now aggressive divestment. Nomura has also raised the target price to 12,545, and that is the March 2020 target. They are saying that the potential earning has been increased by 7% for this year as well as next year. And Citi has raised the target price on Sensex to 40,500 from 39,000. They're saying that the markets are likely to expect more coming out of the government kitty going ahead.
Darshan, thanks for that. Let's also listen into what corporate India has had to say.
First and foremost, we have to compare this with the effective tax rate applicable in the rest of the world. And India is now entering into a realm where we are already offering to the world that we are as good as any other part of the world and maybe better than many of the advanced countries in terms of the taxation structure. So I would say 22% basic tax can move all the way up to maybe a 27% ETR. But a good number of companies in India are in excess of 30 to 36% range even today. So the additional tax benefit of ranging between maybe a 10 plus percentage is going to be a major attraction for FDI to come in. And that also, in my opinion, like somebody mentioned about, I think Bhutani or Pranav mentioned about timing of this, post the trade war initiation between America and China, and the current visit of the Prime Minister to America, and where we are expected to be announcing a lot more of benefits, inviting people to come and set up their manufacturing instead of China into India. It's a major move. It's far beyond even Article 370, in my opinion, as far as an Indian corporate is concerned.
At the least, what it has done is it has given a boost to the sentiments.
Sure.
And it does play out in an economy which is plagued right now. And I feel over a period of time, it will not be short term, but over a medium term or a long term, there will be capital investment that will happen in the country. So immediately, whether it will spur consumption, I am not very sure.
I would look at it slightly broader, larger picture than just restricting it to IT services. You know, when you look at an investment climate in a country, you look at stable geopolitical situation, you look at lower inflation, you look at ample availability of resources, and then you look at conducive tax policies. And I think on the fourth front, they have really taken a big, bold step forward. And I am very confident that this will ignite a certain amount of investment across sectors. And I wouldn't worry too much about demand because, you know, if you go back in history, if you have right capacity, you would be able to cater to demand no matter where the demand exists. So maybe the demand is little lower in the country today, but this could give a big boost to Make in India, and you could be servicing orders on manufacturing for US or Europe or anywhere else in the world, just the way IT services did, 20 years back when we started our journey.
The Finance Minister has also announced that the government would not levy taxes on share buybacks announced before the budget was presented on July 5th. Yatin is here to tell us which companies stand to benefit from this. Yatin.
Well, if you look at, the announcement coming in from the Finance Minister last week, clearly there was a lot of confusion regarding the buybacks which had already been announced before the presentation of the Union Budget on July 5th. Now, the Finance Minister clarified that any buyback which was announced prior to, July 5th will not attract any kind of a distribution tax. Remember, the Finance Minister did announce in the budget that dividends as well as buybacks will be treated equal, and hence the taxation also would be equal to the tune of 18 to 20%. If you look at the smaller companies which have already announced the buyback but are yet to initiate a buyback, the list is long. nearly 14 to 1500 crore rupees of buybacks in these companies would get benefited in terms of the tax savings that the companies would get. Starting with Welspun Corporation, they announced the buyback of almost 400 crores, followed by Greaves Cotton, Saskane, Star Cement, as well as Eris Life. These companies announced buybacks in excess of 100 crores. There were also a variety of small and mid-cap companies like SmartLink Solutions, Elegant Marbles, Vyapar Industries, so on and so forth, which also had announced the buyback, but were not able to conclude the buyback or initiate a buyback given the tax implications. Also in the large cap space, watch out for Wipro, BSC Limited, as well as Adani Ports. These companies had initiated buyback prior to the budget. However, by this time they have already completed and concluded the entire buyback offer, which means that they will not have to provision or provide for any kind of a taxation, which earlier, the case was, especially in the case of Wipro, where the tax savings could be probably to the tune of 2,000 crores. So clearly, this is a kind of a booster for all of these companies which have announced the buybacks, or the board has approved the buyback scheme, which was to be effective before 5th of July.
Yes, and thanks for that. Market veterans expect funds to return to Indian equities after the recent action taken by the government. Let's hear them out.
When foreign investors look at India, they compare India to Indonesia, Malaysia, and other countries around the world, but particularly in Asia. And now India is competitive as regards to taxation vis-a-vis these other countries. What I'm interested in is seeing companies do two things. One, increase their dividend payout, and number two, invest more in the business, invest more in labor-saving equipment, more efficiency, and greater application of new techniques to their manufacturing and their distribution. Up to now in our fund, China is a little higher than India, but now we may see India surpassing China. It depends on what opportunity we find in the Indian market.
See, what was happening in India is last few years we were growing entirely led by consumption, and that consumption growth was also supported by falling household savings and rising household leverage. Actually, white collar wages have been under pressure, so you could not have continued to grow despite low income through borrowings. And what we needed to do was to revive the capital expenditure cycle so that new companies are formed, new plants are put up, so you create jobs and then consumption can grow on a sustained basis. So I think the good thing in this is that one, it reverses the negativity in the economy, and which is very important. And two, this entire money will go to companies. And what will companies do with this money? I mean, it's at a gross level $20-odd billion. Companies will either cut prices, which is good for lower inflation, good for consumers, or they will put up new plants, or they will pay more dividends, which again money comes back into the system.
With one stroke of the pen, we have altered future cash flows to eternity by about 10%. So it is a major move, and it should not be underestimated from a long-term perspective. But even from a near-term perspective, it has got great potency, because I think one of the things that was plaguing the economy and the markets was a bad sentiment. I think people had come to believe that the government didn't care for the economy, and this one measure, I think, alters that perception straight away. And I've been worried over the past 2 months or so about the reflexivity of falling share prices on the real economy, which is when share prices are falling, it can actually drag the economy down further. Now you get the opposite effect, which is rising share prices actually can boost the real economy.
Prime Minister Narendra Modi and US President Donald Trump received a rousing reception from the Indian diaspora in Houston. Both leaders addressed the crowd on a host of issues ranging from trade to terrorism. Here are some of the highlights.
देश के सामने 70 साल से एक और बड़ा चैलेंज था, जिसे कुछ दिन पहले भारत ने फेयरवेल दे दिया है। समझ गए? ये विषय है आर्टिकल 370 का। आर्टिकल 370 ने आर्टिकल 370 ने जम्मू कश्मीर और लद्दाख के लोगों को विकास से और समान अधिकारों से वंचित रखा था। इस स्थिति का लाभ आतंकवाद और अलगाववाद बढ़ाने वाली ताकतें उठा रही थी। अब भारत के संविधान ने जो अधिकार बाकी भारतीयों को दिए हैं, वही अधिकार जम्मू कश्मीर और लद्दाख के लोगों को भी मिल गए हैं। अब समय आ गया है कि आतंकवाद के खिलाफ और आतंकवाद को बढ़ावा देने वालों के खिलाफ निर्णायक लड़ाई लड़ी जाए। मैं यहां पर जोर देकर कहना चाहूंगा कि इस लड़ाई में प्रेसिडेंट ट्रंप पूरी मजबूती के साथ आतंक के खिलाफ खड़े हुए हैं। मैं कल एनर्जी सेक्टर के सीईओ से यहां ह्यूस्टन में मिला। भारत ने कॉरपोरेट टैक्स में भारी कमी का जो निर्णय लिया है, उससे वो सारे के सारे लोग बहुत ही उत्साहित नजर आए। उनका फीडबैक है कि कॉरपोरेट टैक्स कम करने के फैसले से सिर्फ भारत में ही नहीं बल्कि ग्लोबल बिजनेस लीडर्स में बहुत पॉजिटिव मैसेज गया है। ये फैसला भारत को और ग्लोबल कॉम्पिटिटिव बनाएगा। आने वाले 2-3 दिनों में प्रेसिडेंट ट्रंप के साथ मेरी बातचीत होने वाली है। मैं उम्मीद करता हूं कि उससे भी कुछ पॉजिटिव रिजल्ट्स निकलेगा। वैसे तो प्रेसिडेंट ट्रंप मुझे टफ नेगोशिएटर कहते हैं, लेकिन वो खुद भी द आर्ट ऑफ द डील में माहिर है। और मैं उनसे बहुत कुछ सीख रहा हूं।
Petronet's pledge to purchase up to 5 million tons of LNG per year from the United States, which could lead to billions of dollars of LNG exports to India in the coming years. Over the last year, crude exports to India have grown by 400%, and liquefied natural gas exports continue to soar at record numbers. These tremendous exports not only expand employment in America, but they increase freedom and security for India. To keep our nation safe, the United States and India are forging an even stronger security partnership. U.S. defense sales to India have also reached $18 billion over the past decade. We're looking forward to concluding several new defense deals very soon. There are a lot of them in the works.
While President Trump's endorsement of the Petronet LNG's proposed investment in the United States grabbed headlines, shareholders don't seem to be too impressed with this decision. Samit Sarkar is standing by to tell us why.
So while the street is concerned on Petronet's new non-binding memorandum of understanding with Tellurian, first, according to Bank of America Merrill Lynch, the deal introduces a large project risk related to timing and cost, which would not only cap the valuations of Petronet but also impact the future cash flows of the company. Now, currently, Petronet is a net cash company, but this equity commitment of $2.5 billion can turn the company into a net debt company. Also, on the positive side, if you see, this LNG purchase will fill a large part of the spare capacity that is there in the Dahej and the Kochi plant, but the company might find it difficult to sell this gas in India, as in the case of GAIL India that we have been currently seeing. Now, according to Citi, now they remain concerned on the potential significant capital commitment that Petronet has done, and according to the brokerage, this investment of up to $2.5 billion could use up to 5 years of free cash flow of Petronet and could also translate into lower dividend payout in future. Similarly, Edelweiss is also concerned about the decline in dividend payout in future because of this equity commitment, and says that it would have preferred Petronet if the prices would have been linked to Asian spot LNG prices. Lastly, Centrum, now they expect the leverage to rise, impacting the cash flows in the near term for Petronet. On the positive side, they say that the proposed investment takes care of the long-drawn concerns of capital allocation when it comes to Petronet, but this positive has largely been offset by the risk of lower dividend payout in future.
Soumya, thanks for that. Out of time on the show. Thank you so much for joining us today.